Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello friends, this is Vijay Bambwani here. I hope my videos are helping you understand the nuances of the markets better and making you better investors and traders. In this video, I'm going to tackle a very critical issue, some doubts that you might have regarding the strife in Eastern Europe, particularly between Russia and Ukraine. Now, I have been advocating purchasing gold and silver in the physical form since the time I've started recording videos for Equity Master in the middle of calendar year 2019. Well, 2019-20 were good years for bullion. 2021 was a rather forgettable one because gold and silver both reacted lower. Now that we are seeing gold and silver rise higher, there might be some doubts in some investors' minds about the problem that Russia is facing now that it is cut off from SWIFT. There might be sanctions that could impose restrictions on the movement of money, both into and out of Russia, and therefore whether the Russian central bank may resort to selling its hoard of gold or its reserves of gold, and if Russians start selling their gold, will the price of gold collapse? Will the dream run that you have seen in the last few weeks end? So this, of course, is a very critical issue, and in my video, I'm going to share my thoughts with you and provide you with some fun facts, some hard data, and we'll arrive at a 360-degree decision about whether we should be holding our gold and silver or we should be liquidating them. So here goes. Now, the country-wise holding of gold in metric tons, as well as the percentage of that holding of gold as a component of its total reserve, is something that I wish to share with you, and then we'll also look at the implications of these numbers. The USA tops the list with 8,134 tons of gold, and that gold is basically 79% of its entire reserves. The next spot goes to Germany, which is holding 3,359 metric tons of gold, which is 76% of its entire reserves. Third is Italy at 2,452 tons of gold, with that being 71% of its entire reserves. Number 4 is France with 2,436 metric tons, which comprises 66% of its total reserves. Now, this is the Western world, typically America and Western Europe. Let's now come to Eastern Europe and Asia. Now you'll suddenly see a tectonic shift. Number 5 is Russia, which is what this video is all about, which holds 2,299 metric tons of gold, but that comprises only 21% of its reserves. China comes at number 6 with 1,948 metric tons, but that is only 3% of its entire reserve. Switzerland, 1,040 tons, which is 7% of its entire reserves. Japan holds 846 metric tons, which is only 3% of its entire reserve. India holds 754 metric tons, which is 8% of its entire reserves. And we go to Netherlands, which of course is a Western European country, which holds 612 metric tons, which is 71% of its entire reserve. So what we do see is, on one hand, Europe and America hold a lot of gold, and that's a very big component of the total reserves. In Asia, we tend to hold a lower amount of gold as compared to America and Europe, but that component is extremely small as compared to the entire reserves that we hold. All right. So if at all push comes to shove, gold is not the last resort that you would want to sell. Take, for example, India. The share of gold in Indian total reserves is approximately 8%. So there are 92 point some fraction percentage of other assets that India still holds in addition to gold, which can also be sold should push come to shove. This is a hypothetical situation. So with Russia having 21% of its entire holding in gold, it still has 79% by way of other assets. Now, you could even argue that some of the Russian forex amounts lying in American and European banks have been confiscated, which means that the percentage of gold comprising its total reserves might go up because this data is somewhat dated. Fair enough. Now, what if the Russians were to resort to selling gold to raise cash? Can it happen? Definitely can happen, because war is a very expensive business. You need money to basically keep men and machines going. So the Russians, can they sell their gold? Yes, they can, but they are risking destabilizing the ruble versus the dollar, which is now trading in triple digits. So look at the other countries which are likely to buy gold because of this very problem of war. First of all, the largest ETF fund in America itself is witnessing renewed interest in physical buying of gold. On the other hand, in 2021, we saw Thailand, which was the biggest buyer, the Thailand Central Bank, that is the biggest buyer, with 90 metric tons being purchased in 2021 alone. India came at a close number 2 in 2021 with purchases of 77 metric tons. As a matter of fact, the holding of central banks where gold is concerned is now at 31-year highs and climbing. That's the most important part. It's climbing because central banks are slowly but surely moving assets very, very gradually, very, very mildly out of the US dollar and getting into bullion. Because the world itself after COVID is a little more nervous, a little more frightened, and a little more edgy. So, as the old saying goes, in God we trust, and then we trust in gold. So, God and gold. Gold as it is the currency of the gods. So, central banks are now reposing their trust in gold and God. And ironically, the countries that are facing threat or feeling threat perception from the actions of Russia over Ukraine, Uzbekistan, Kazakhstan, their central banks are now starting to buy gold because they feel they could feel the heat, or rather the collateral damages of war in the neighborhood, which means their local currencies could suddenly start weakening, imported inflation could come in, and therefore, by reflex, they are basically trying to buy gold. So it is not that Russian gold can destabilize gold prices and trigger a big collapse, because there are other central banks which are readily able to and willing to buy gold. There are ETFs in the Western countries which are lapping up gold, and we as retail investors are also either looking at gold with renewed interest, or some of us are even buying by way of ETFs or physical or whatever. So these Russian selling at best will be a comma but not a full stop on the rally in gold. The numbers seem to back that hypothesis. On this cheerful note, I'll bid goodbye to you, not before reminding you to click like on this video if you liked what you saw. Subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh videos being put up out here. Good, bad or ugly, I always look forward to your feedback in the comment section. And please help me reach out to fellow like-minded investors and traders by referring my video to your family and friends. Thank you for your patience till we meet again in my next. This is Vijay Bambwani signing off for now. Bye-bye.